everyone, today we're going to be talking about the Tesla split, how to approach it, how to trade it, the thesis behind it. So, everyone wants to know, where's Tesla going from here? I have a high confidence answer to that question. So, that being said, I'm lead trainer with StocksToTrade, Tim Bohen. Keep in mind, use the resources below. What I'm going to talk about today, very, very similar to the methodology and the approach to the Amazon split. And the reason I bring that up is money call. I mean, again, high dollar stock, not like some 400% penny stock mover, but very safe. And if you watch, I did 3 videos talking about the basing at 102, 104, and the expectation that it could fill the gap up to 140, okay? You can see it kiss that and it's pulling back now. So the point is, you can use these levels, you can use these patterns, and you can use the predictability. And again, watch those videos. They're all there. I think they're great. I think it, and again, whether you caught them in time and you took the trade or not, there is education there because we've seen so many of these splits. Wouldn't surprise me to see a lot of these. I mean, a lot of these tech stocks that have run up a lot over the last few years, pulling back. They want more buyers, okay? They want, I mean, remember how the stock market works. I mean, listen, so many of these tech stocks, multi-year, decade-long run-ups, they don't like seeing those pullbacks. So they're like, hey, how can we get some more buyers? How about we do a split? People don't like $1,000 stocks in the case of Tesla. They don't like $3,000 stocks in the sense of Amazon. So now why is that? I mean, understand if you're, number one, if you got a bigger account or if you just trade real stocks, remember, most people in trading, I mean, there's a reason 90% fail, okay? This is a component of the 90% failure rate. Most people want to be able, they want to make, 20, 30, 40, 50% in the matter of minutes or hours or days because they have terrible expectations and they want it all now. They want a Lambo now. They don't care about later. So what happens is, I mean, listen, if you got a smaller account, what are you going to do? You're going to buy Amazon pre-split. You can buy one share at $3,000. And even if the thing does move, okay, say it makes some crazy move, you make $40 or something, okay? So that's the idea. The company split, but they want to make the stock price more attractive to people with smaller accounts. Now, one thing I never understand, I don't get why they, with Tesla did a 3-for-1 split. If I was Elon, which Elon's a buddy of mine, give me a call, Elon. We've talked about this many times, but I'd split this thing down to $20. I mean, listen, I know there's a certain cachet to having a high stock price. It's why a lot of these companies don't do splits. Listen, Warren Buffett, Berkshire, it's like $250,000 a share, Berkshire A, or it might be $300,000. But he does that. Warren intentionally does that because he wants there to be a cachet. He's like, hey, I'm Warren Buffett. Hey, I got the highest, as far as I know, it's the highest price stock out there. And he doesn't really care if you buy it or not. He just wants to be, cool. But, I mean, for lack of a better term. I'm not sure if Warren's that concerned with being cool. But, again, there's a cachet to having a high stock price. But, again, I don't know why you don't just split this thing down to $20 and then let all the degenerates pile in. Let all the short sellers pile in. But I'm getting distracted, as I tend to do. All right, so how are we going to trade Tesla? Number one, don't buy before the split. You would have, if you go back to those Amazon videos, if you bought before the split, you got bagged. Took months and months and months to get back to break even. Tesla, it's day one of the split. It's down 2%. It's, the biggest reason it's down 2% is a bunch of morons piled in yesterday expecting some quick gap up. They didn't get the gap up. Now they're they're just repeating the cycle of terrible trade decisions. So now they're selling because they don't understand how to have a plan, how to have a process, etc. They just thought Tesla was going to go to 400 today post-split, because I don't know. If I can save one person, Elon's trying to take us to Mars. Elon is trying to save humanity. If I could just save one person from some of this terrible decision making, I will be a happy man. Nevertheless, you got the gap down as expected, just like Amazon gap down. Now, what we're going to look for is basing at or around 300. I think 300 is going to be a key level. I know it sounds corny, but we see this so many times, whether it be low price stocks or high price stocks, they tend to have magnets, as we call it. Magnets at or around whole dollar, half dollars, at 10, at 20, at 50, 100, 200, 300. So I expect Tesla to have a 300 magnet. It's gonna pin to that magnet for a while, and then you're gonna look for grinding action back above that 315, maybe even 320 level. What that gives you is a multi-month breakout. So now you've got basing. Okay, if you're a big fan of Brian Shannon, we talk about the accumulation, the 4 phases, the distribution, the basing action. Check out, we had a podcast with Brian Shannon. We'll link it below. It's very influential for technical analysis. So anyway, let's get this thing to base at 300, break through 315, maybe even 320 if you're even more conservative. Risk down under 300. Okay, so remember, we want to have that 300 magnet. Days, weeks, maybe even months, okay? Magnet, perk through the 315, 320 level. That's our confirmation, our signal, as we say. Then our stop loss would be a 300 fail, probably like 299. So say you enter at 316, your stop would be 299, and then your goal would be back at or around these highs from the pre-Ukraine highs, okay? Because remember, basically the reason Tesla dumped, the reason Apple dumped, the reason Amazon dumped was all because of the Ukraine situation. Okay, that's right here. Basically the high for Tesla was when we thought World War III was coming. Okay, I remember those days. You know what? All joke, no joke. I mean, listen, that war is horrible. There's one reason I am so against funding these wars and supporting these wars. Nothing ever good comes from war. I don't care if we're involved, anybody's involved. Anyway, scary stuff when that happened. So I think that being said, Tesla could for sure retest the pre-Ukraine highs at 380. So there you go. You have a great risk to reward. Okay. Let's say you're risking 15 cents a share. If this model works, just like the gap to fill worked on Amazon, you've got $65 of upside. What is that? 4 to 4.5 to 1 risk to reward. That's trade, baby. You get a headline, Elon does something cool, releases some new product, 380 is easy. So, all right, guys. Again, I was a little bit quicker on this whole thought process. Check out those Amazon videos below. All 3 of them would be linked. They're all, they're all fleshed out a little more because it's 3 videos, and it's same idea, same methodology, not following the crowd, using key levels, etc. All right, and if you really, really, really want to get in the nitty-gritty, check out the StocksToTrade team. I try and pack as much information as I can in these videos, but the StocksToTrade team is 4,000 webinars that I've done, over 4,000 webinars in 6 years or so, okay? Check it out. It's the way to actually nail this stuff. Have a great day. We'll see you next time.